Welcome back to Trade 360. I'm Diane King Hall. Time now for the big three stocks, 3 charts, and 3 trades. Rick Ducat will take us through the charts, and here to take us through the trades, we've got Don Kaufman of Theo Trade. It is great to see both of you. Don, before we get into your trades, you know I like when you're on, we need a big picture take for you on the market action we're seeing. We're seeing a little bit of flagging today. It feels like it's kind of catalyst-light day. What's your view?
Yeah, you know what? I mean, what do you say about a rip and move to the upside? Right now, what we're predominantly seeing, though, is a little froth in the marketplace. It's really a couple of the major tech stocks, the Mag 7, that are in some squeezes to the upside, that are really driving anything else to the upside at this point. But the marketplace, you know, here we sit. I think we're well overdue for somewhat of a pullback just in the near term over here. Expect a little volatility, maybe a little fear to come back into play. But otherwise, again, waiting for more exogenous events in this market.
Yeah, waiting for more. All right, let's talk about the first one on your list. You got Chevron in your line of sight. What's your view here?
All right, this first trade is actually going to be a bullish trade, and has a lot to do with Chevron trading off the 135 level, which Rick is going to show you here in just a moment. A nice base of support kind of forming, and Chevron's got a little bit of a bid under it, so it's starting to rally somewhat, but it's really underperforming the peers in terms of energy. I think it's got you know, a nice bullish odds in the near term here. And something we'll also discuss is you know, obviously everybody's got their focus on tariffs, but I'm thinking a lot about sanctions, specifically possibly towards Russia, which could come into play and help boost some of the energy markets. So here in the CVX, I'm actually going out to the June 13th expiration. Just going to buy the 145 calls, sell the 150 calls, a $5 wide call spread for a $1.15 debit. Nice shot to the upside here for the next month.
Okay, but I think part of the issue with Chevron is also that back and forth they have over that Hess deal with which, you know, Exxon, and there's going to be a trial about that later this month. But Rick, let's go through the technicals here. What story are they telling?
Yes, Don was correct. The 135 level was pretty much the first thing I was going to talk about, because it's quite a significant area where price has held support. You can see this was an intraday low from all the way back in August, and then for the most part, in terms of closing prices, we held on near that level, around 135. The intraday lows came in near 132, but we've started to turn around now. We are holding on above our yellow 21-day exponential moving average, and RSI is also hanging on to its own accompanying trend line, and it's staying above that 50 midline here. So in the shorter term, one area that stands out to the upside, 147.50, double bottom, and then retest of resistance, and we had our big breakdown through that level. So that's also fairly close to our orange 63-day EMA as well, near 146.25. So 146, 147, that's a general resistance area to consider potentially. And if we were to look at our other studies, standard deviation channels and volume profile, we can see that for now, price is hanging on above that -1 standard deviation channel, and we've got a notable, relatively speaking, volume node here near about 145 for price to work its way through, and then you know, possibly the retest of 147.50, this double bottom low.
Okay, all right, Don, before we move on to your next trade, any final thoughts you want to leave us with on Chevron?
Yeah, you know, you were mentioning a moment ago the Hess and the litigation actually involved in there. I don't think in the near term that's actually going to have much of an impact. This is, you know, a rising tide kind of lifts all boats, and the sector itself is relatively hot right now, and I expect Chevron again to play catch up to the upside.
All right, potentially playing catch up to the upside. Let's move on to your next trade on your list. You've got that iShares Germany ETF on your list. It has certainly rallied so far this year, especially, you know, it comes in the context of that outperformance we had been seeing in Europe. So what's your view here, Don?
Yeah, the first thing I would ask on this particular question is rallying to an all-time high predicated on exactly what? More spending over here? Political complete discourse in Germany? I mean, I can give you numerous reasons that I would like, obviously, take bearish positions in here. But the one that is also kind of a standout is, you know, a moment ago, I was actually talking about sanctions and the possibility of sanctions back to Russia. I mean, Germany would be in the direct crosshairs of those extreme sanctions towards Russia. There's no question that that's actually going to come back to roost, specifically inside of Germany. And in the near term, I don't think it's priced into this marketplace. I don't think that risk is priced into the marketplace. I think it's worth taking the shot to the downside here. So I'm going out to the July 18th expiration. I'm going to be buying a 40 put, selling a 35 put. So another $5 wide put spread. This one's done for $1 debit. It's a shot to the downside, giving myself all the way out to July, which is, 2 months of time over here, is largely predicated on the idea that I can't necessarily time when the sell side activity is going to come. But as I said, there's, numerous ideas out there that could be wildly bearish, for German markets. It's just which one do you actually want to go after? Again, well worth the risk reward at this point.
Okay, all right. So, Rick, you're up next. Tell me about the patterns that you're noticing when it comes to this chart.
Sure. This particular trade we just discussed, that would have a break even of 39. That's one of the levels that I highlighted here. This green line that we had, once again, kind of a double bottom type shape here, and then we retested it. So it was a bit above 39 and change, but that was definitely the level that caught my eye as well. We can see we've hit a bit of a ceiling here. We weren't really able to crack above the 41 level. 40.87 is where price topped out. Well above our moving averages, though, and if you were to backtrack a bit, price has been kind of grinding out these higher and higher lows here. So we do have this rather modestly sloping longer-term trend line to consider, but it's also quite far away at this point. Our short-term trend line has been broken, though. Our rather steep white trend line here. Now we're in more of this range-bound holding pattern for right now. And I can't help but notice as well a bit of a divergence in the RSI, bearish divergence here, where price was making new highs, and now we're kind of, drifting off here. We're not really able to make it into that overbought area once again here. So if we were to look at our other studies here, we can see that the area where we are right now, pretty heavy trading activity. There's quite a bit of volume that's happened as we sit above our +1 standard deviation channel. So by one measure, the move up has already been somewhat extreme, according to this study. To the downside, 39, our area that we mentioned earlier, that's another high volume area down on the path to our point of control. 3750, another area where there's quite a bit of supportive indicators lining up.
Okay, Don, I want to go back to you just for a follow-up on this one. Given that this is 2 months out, are there any event risks that you have to keep in mind, or anything off of what Rick was just pointing out in terms of some of the patterns?
Yeah, the event risk over here is always going to be political, specifically with German markets. And it's fairly shocking to me at this point how well these markets have fared with the political discourse. It's almost like political gridlock over here just means more spending. Don't worry about it. But there's a huge disconnect between what's going on, on Main Street in Germany and what's actually going on in their marketplace. And again, I think those two actually come to fruition at some point this summer as markets kind of settle in to this kind of gross distortion, if you will, and rally back.
All right, and then Don, let's talk about the last one on your list. That's Apple. It has recovered some ground this year, but certainly not at the same level as, say, some of its peers within the Mag 7. So what's your take here?
Yeah, let's get a little bit contentious over here. So I'm going to take a bearish position inside of Apple. It's not a massive bearish position. It's just looking for a pullback under the 200 level. I don't think I'm asking too much on this one. I think Apple is actually facing some considerable headwinds. And again, we can talk about, the App Store and some of the lawsuits obviously involving that. But to me, this is really, in terms of technology and the epicenter of AI, they're not in it right now. Plain and simple. So when the market does eventually pull back, I think Apple's actually situated to pull back under the 200 level. As such, I'm going to go to the July 18th expiration. I'm just going to buy the 200 puts, sell the 195 puts. I keep using these spreads to kind of cut my costs, keep my risk intact. This $5 wide spread is trading for $1.05 debit. It's a shot to the downside for Apple to break not only the 200 level, but proceeding all the way down to 195.
Okay, so you are looking for a bite out of Apple, pardon the pun there, Don. All right, Rick, take us through what you're paying attention to when it comes to the chart for Apple.
A bearish play on Apple, maybe to some people might be contentious indeed, but when I look at the price action, what I see is that we've had a downside breakout from our symmetrical triangle type pattern. We hit new 52-week lows quite recently on our tariff news. We did manage to break out of our downward channel, but we've made a series of lower highs. highs each time. See here, here, and we haven't taken out our previous highs from the last rally, and we're stuck at our orange 63-day EMA right now as well. Not really any good signs of a strong trend either way. Moving averages are relatively clustered together and moving sideways here, so not really seeing a lot of strong upside bias, certainly. RSI is above the 50 midline, but you know, we have had some rapid fire crossovers back and forth with these swings in price. I guess you could say one more positive point would be this 196 level. Price did hold on there for the most part. We filled this small gap as well. So if we were to consider some of our other studies here, the volume profile point of control comes in at 229 or so, right around that level, and it's fairly close to our old highs and our linear regression line. So 225 to like 229, that could be a resistance area that the bulls could need to watch out for. In terms of support, we have our -2 standard deviation channel and our green line representing some significant low points that price did hold during its last decline there. So around 195, 196, that's an area to watch to the downside.
Okay, 195, 196, area to watch to the downside. Don, any final thoughts you want to leave us with on Apple or any of your other picks today?
Yeah, really at this point in time, as I said, I'm looking for a little bit of a pullback in the overall marketplace. Nothing too crazy over here. Look, we have a situation right now where the market actually believes it has like veto power, that the market actually believes that it has a vote in what's actually going on, you know, economically here. And I think the, you know, the retail traders are going to be set straight a little bit, and market volatility picks up once again in the coming weeks as things are not necessarily as certain as we presently believe, not only with tariffs, but in the overall economic picture.
Okay, interesting. We'll be watching out for some indicators on that front. That's Don Kaufman, co-founder of Theo Trade, with his picks, and Rick Ducat, lead market technician here on Schwab Network. Thank you both so much.